Hedgeye process question. For those who are extremely busy intraday and don't have time to trade in and out of signals, what's the best way to use Hedgeye for medium and long term? Placing end of day trades using risk ranges and the investing ideas product. Yeah, I think so. This actually applies to me because I'm, not a great trader and always mistime things. So what I think about is, first of all, what quad are we in, right? So then you get the exposures right, and then think about when to buy those exposures or how much to buy those exposures, and to your point, very simplistically, when they're up a lot, that's when you're selling, and when there's a correction, that's when you're buying. But the first thing is, do you have the right exposures for the quad? I think.
Yeah.
Right?
I mean, if your portfolio doesn't look like this, like if you don't have at least right now, in your in the MoFo portfolio, the Mucker family office, if you don't have at least 15 macro positions on all the time, you're not doing it right. You're just not. Now the question is, like on IVOL, when I'm at 10%, where I was coming into last week, because I went to 10% when the curve compressed, and when I go today, I actually took this one all the way down to 2% yesterday. 2. I didn't do it all in one day. I sold it every day for the last 3 days. And then I finally got my signals, which again is your early look. It's the singularity of the signal, don't forget. That's when you're looking at everything at the same time. So it's a multi-factor, multi-duration model. It's not just looking at what IVOL itself is doing in terms of my asset allocation. So again, that's gone down to 2%. Energy, which had gone all the way up to my max 6% position, this thing is going to get taken down to 1% today if it's up again. From 6 to 1. But do you go to 6? Do you go to 1? That's being aggressive, but it's also just doing it for consecutive days at a time and doing it incrementally. Now, when you go up for 6 days in a row, like Qs, for example, or XLK, these are 2 other positions I have. These 2 positions, MSOS, I mean, these are all positions I have. You either go to your max, which in these, all these are equity positions. So my max is 6%. Did you go to your 6%? I'm asking you for some friends and for my former self, because you don't really have the ammo to feed those ducks. The ducks are now chasing you. You're going squirrely. The ducks are chasing the person with no bread, right? So there are some very good gifts on that, by the way, that Hedgeye Nation has developed.
Okay. Hold on here.
But if you took, one more point in this, let's just say that we took 15 positions with an average position size of, I don't know, whatever you want it to be, 1%. If you cut it all in half, you took 15% of your capital down to 7.5%, right? That's a huge risk management move without changing your quad, right? So you don't have to be max in every position all the time, but having the floorboards and the base pack of your quad, that's Jonesy's point. If that isn't set up and you're an all or none person when it comes to tickers is just gambling, okay? Yeah. You're trying to pick the one thing that I like and trying to be big in the certain time that I can be. That's like going to the craps table and picking one spot on the table instead of, what if you had all of your money on the table in all the positions, right? So again, and had a better way to handicap the probability than playing craps, which doing it our way obviously has a much higher batting average than playing craps.